Hi, and welcome to Module 1. In this module, we'll discuss the environment and theoretical structure of financial accounting. You can see the learning objectives of the module there. Read them at your convenience. I'll talk about in a moment what the Jamie picture is. Let's talk first about what is accounting. Accounting is a special language. It's a special language that companies use to communicate financial information to help people both inside and outside of the organization make decisions. Accounting is the process of identifying and measuring and classifying and accumulating and then summarizing and communicating information that is useful to decision makers. Accounting information includes financial accounting information and managerial accounting information. Financial accounting information and how to produce financial accounting information is the topic in this course and in financial accounting reporting 2 and 3 as well. The managerial accounting information we will discuss primarily in the cost accounting course. In a moment, we'll talk more about what distinguishes those two types of information. Let's first talk about the environment of accounting. So I'm going to change here. And this is a depiction of how the firm fits into the economy. So down here, we have a company. And the company is big enough now to have a board of directors, a chief executive officer, a chief financial officer, a chief operating officer, and a general counsel. Chief operating officer. Those are the three vice president levels that are almost always in a company. Some companies that are heavy information companies might also have a chief information officer or other offices, but these are the three traditional C-suite offices. And the chief operating officer, that's the person that's going to have the vice president of sales and the vice president of manufacturing or service and distribution, vice president of operations under them. So that's what these three dots represent. These three dots represent ... They represent that the organization goes down from there. So within the chief financial officer operations, you'll see the chief accounting officer is often called the controller, financial controller, and then the treasurer. You'll learn more about what those two roles involve in this course and upcoming courses. And then counsel is the general counsel's office. So that usually is an attorney. Okay. Now, I should point out that this is a large company, and that's what we're primarily talking about is established companies. But this might be a very small company where the accounting information is primarily out of the checkbook. We'll see in this course how that works. But right now we're talking about how these companies, we're talking about financial accounting information provided to companies that have already done what we call tapped the capital markets. What happens here is that this company experiences some success and grows, and eventually it could be so much better, but it doesn't have enough capital. And that's when this company that has great ideas, we match it with capital providers. These are organizations with funds, but no ideas. These are organizations with ideas, but not enough funds. These capital providers can come in the form of two instruments. debt instruments or equity instruments. They take the form of a debt instrument or an equity instrument. Debt instruments, these are primarily bank loans from the bank, which is usually the first big source of debt capital. And then also eventually it might be publicly traded bonds or privately traded bonds. And then the equity capital, what capital provided us under an equity arrangement, is stock, common stock, preferred stock. And you will learn about the accounting for all of this in upcoming courses. Okay, so now let's talk about the relationship between these two stations. All right. So the capital providers, for example, the debt providers, they send money to the company. And in return, the company promises to give them money in the form of interest payments, and then ultimately paying back the principal on the bonds or the bank loan, but also information. Same with the same can be true with the equity providers, where they provide money, and then they get information, maybe money in the form of dividends. Okay, and so that's the relationship. This is where we come in, because this information is financial accounting information. Okay. And it comes out of the chief financial officer's or operations. Usually the chief accounting officer will prepare it, and the people on that staff. Okay. Now, notice that the company is providing information. Do you see something potentially wrong with that? How do we know this is going to be accurate information or reliable information? Well, that is where independent auditor comes in. Independent auditor, and of course they're CPAs. The CPA profession has the monopoly franchise to check the reliability of the information being provided to external capital providers, banks, bondholders, stockholders around the globe. And so this is what this is the primary thing CPAs do. Now you're probably thinking, well, I thought CPAs did taxes. Oh, we do, plenty of them. However, the tax business of the CPA flowed out of the fact that early on, the CPAs would be providing these audit services, and then companies said, hey, you're really good at this. Can you do our tax compliance returns as well? And sure, we can do that. And that's how the tax business built. And then there's also a huge consulting business, typically, and analysis business and that all grew out as well of the relationship between the CPA firm and the company. Okay. And so that's how this information gains credibility. Basically, the concept here is that the capital providers said, hey, I'll make you a deal. I will lend you some amount of money, and then you pay me interest at this rate. And that interest rate was established to compensate the capital provider for the time value of money, but also the risk that they won't get repaid. And if what the company is saying here is, hey, we want you to be very confident in your investment with us. So we will pay these CPAs to audit this information so that it is more reliable to you. And then in return, the company is willing to make the loan at a lesser interest rate. So that's how the relationship between the companies work. It's the same thing for the equity providers as well. This goes out in the form of this information called the annual report. And we accountants, we CPAs, produce that annual report. That's what you're going to learn how to do in financial accounting reporting 1, 2, and 3, and then even 4. You're going to learn how to account for all the transactions that go on at this company and then compile them into the financial statements. And that's the information that we provide to the capital markets. You will also learn how to conduct these audits and be the auditor for companies. Many of our students start their career with the audit firms doing the audits. Now, I mentioned tax earlier. And that's certainly relevant. So the Internal Revenue Service, the IRS, is the taxing authority. Company has to give them information in the form of the tax return, and of course also plenty of money. And this information also is prepared by the accountants, and often with the help of CPA firms. So we also can bring a box over here. The CPAs also preparing that information. And so that's the basic relationship of the information. Now I'll add a few more boxes into the arrangement here, just so you see a couple of other relevant organizations. Here's one. By the way, many of our students go to work for the CPA firms preparing the tax returns. Of course, many go to the IRS as well and work for them. That's a really great career that some of our students do. And this box over here is the internal auditors. This is a really great job to launch your career within a company. What the internal auditors do is they report really to the board of directors, and they work on the inside to do both financial and operational audits to assess the internal controls of the company and establish those and test them, and to test whether the operations are as efficient as they could be. Great career here that you'll learn about in upcoming courses. Okay. A couple of other, I'll put a box over here called other regulators. And this can be companies like, or organizations, I'm sorry, like the Office of the Comptroller of the Currency, the Defense Contract Audit Agency, the if you're a utility, you might have special reporting, and other regulators. Insurance industry has special regulators. The bank industry has special regulators. Defense contractors have special regulators, and we will provide them with information as well. There's one other organization over here that you'll learn about, and that's the ratings agencies. And they get some information from the company. These are bond rating agencies that provide an independent assessment of the relative risk of the bond, or maybe companies that are going to recommend or not recommend our stock. Okay, now there is one more party I want to introduce you to today that's in this relation. Oh, and by the way, before I even go there, let me say that these capital providers, I can virtually guarantee that your family is a capital provider. If you or your parents have a pension plan, those future funds, those pension plans are funded and they're invested in these sorts of securities. They may have investments in in various companies, and they're their capital providers. If they're union members, the union pension fund is going to be invested here. So most people are capital providers, whether they know it or not. So we are working on behalf of all people across the globe, including your loved ones. It's a very fulfilling and important role we play in society. Okay, now one organization that I haven't put on here yet, but I will now, is financial intermediaries. These are companies like Edward Jones, Stifel Nicholas in this town, Goldman Sachs, Bank of America, Citigroup, JP Morgan. These companies are in the business of matching and representing the capital providers and matching them with companies that have good prospects for investment. And so many of our students, our accounting majors, will go to work in roles at financial intermediaries as well. So lots of opportunities, lots of importance for the CPAs. And I'll return to these relationships periodically in the course, and you'll learn about all these roles. Obviously, in tax class, in your 2 tax courses, you'll learn how we develop the information for the IRS, both for individuals as well as for the companies as a whole, and other organizations, not-for-profit agencies. Many of our students go to work in regulators like the Defense Contract Audit Agency and the insurance regulators and the FBI, heck, yeah, the Securities and Exchange Commission. So these are also roles that you may find yourself in your career. And I just mentioned something called the Securities Exchange Commission. I'm just going to write SEC here. That's not the Southeastern Football Conference in NCAA sports. That's the, write it out, Securities Exchange Commission. The SEC came about as part of the 1933 SEC, Securities Exchange Acts of 1933. And it exists to ensure the efficient and effective functioning of the capital markets. Thus, the SEC exists as an advocate for the capital providers. To this end, we will provide them plenty of information as well. Indeed, when the company now has public debt or public equity, all of this information, what it has to be and what form it will take, is actually dictated by the rules of the Securities Exchange Commission. So we're reporting to them separately, but we're also reporting through them to our capital providers, because they are telling us how this information, what should be in this information and how it should be formatted and developed. Okay, so that's the role accounting plays in the securities markets. Just for a moment. And by the way, of course, as you go through these videos, you can always pause them. Sometimes we'll be moving fast. Sometimes something I said you may want to hear again. By all means, stop it, move that little button back, and listen to it again. Thank you. So let's go to that next page. What is financial accounting information as opposed to managerial accounting information, cost accounting? The primary function of financial accounting information is to provide useful information to users who are external to the business enterprise. This information is prepared according to what we call generally accepted accounting principles. You'll hear that called GAAP. This information is designed to help investors and creditors evaluate the amounts, timing, and uncertainty of the enterprise's future cash receipts and cash disbursements. And again, this enables the capital markets to operate efficiently and effectively. Put simply, capital markets will not operate efficiently and effectively without the services we provide, both in providing information and auditing that information. We accountants, we CPAs. What's the primary function of managerial accounting information? This is to provide useful managerial information to users that are internal to the organization. This information is prepared to meet the particular information needs of management, of your various managers. Of course, financial accounting information is hugely valuable inside the organization. But also, managerial accounting information is because it is customized to meet those particular needs of internal decision makers. Whereas financial accounting information is developed according to, remember, the generally accepted accounting principles we're going to learn. The managerial accounting information is customized. The manager tells us what kind of information they need, and we provide it. That's managerial information. You'll learn a lot about optimal managerial accounting information development in your cost accounting class. That'll be upcoming in a semester or two. So, the Financial Accounting and Reporting series of courses, these are the courses that are going to prepare you for expertise in that financial accounting and reporting. The reporting to those users who are external to the business enterprise, the capital providers. So I'm going to stop this introductory video here, and when I return, when you return to the videos, we'll talk about financial accounting and reporting and how we'll introduce how this information is provided. Thank you for your attention, and I will see you on the next video.